Welcome to this section of the module. We will look at the frameworks that govern carbon markets and corporate climate reporting. The main teaching point is how verification differs across these systems. Verification means checking that climate data is correct and reliable. To understand any framework, we must always ask 4 questions. First, who verifies the data? Second, against what criteria do they check it? Third, at what independence level do they operate? Fourth, what is the consequence of their verification? These 4 questions help us compare different systems. They show us how each system builds trust. By asking these questions, we can see the strengths and limits of each approach. We will use this 4-part test throughout this section. It will guide our review of corporate, voluntary, and government frameworks. Let us begin with corporate frameworks. The Greenhouse Gas Protocol provides corporate and project accounting standards. It defines how organizations calculate and report their emissions. ISO 14064 is a related international standard. It specifies principles and requirements for quantifying and reporting greenhouse gas emissions. Under these corporate frameworks, an independent third-party verification body usually conducts the verification. These bodies operate under ISO 14065 and ISO 14066. These standards set requirements for the validation and verification bodies themselves. The criteria for verification are the organization's own inventory boundaries and the chosen standard. The independence level is strict third-party assurance. The consequence of verification is the issuance of an assurance statement. This statement provides confidence to investors, regulators, and supply chain partners. You must always consult the primary source documents for specific clauses. We do not state tier structures or exact requirements from memory. Next, we move to voluntary carbon market standards. Examples include Verra's Verified Carbon Standard and the Gold Standard. These programs issue tradable carbon credits. Here, accredited third-party auditors conduct validation and verification. The criteria are the specific program rules and the applicable project methodology. The independence level is high. Auditors must be accredited by the standard body. The consequence of a successful verification is the issuance of carbon credits. These credits go into the project's registry account. A registry is a secure database that tracks the ownership of carbon credits. Again, you must consult the primary program rules for specific details. Monitoring and verification frequencies vary by methodology. They are also subject to change over time. You must check the current rules before advising a client. We now transition to the Paris Agreement's Article 6.2 cooperative approaches. Article 6.2 allows parties to the Paris Agreement to trade internationally transferred mitigation outcomes. A party is a country that has signed the agreement. Under this framework, the verification criteria are agreed bilaterally between the participating parties. The independence level is determined by the specific cooperative arrangement. It is not set by a single centralized body. The consequence involves corresponding adjustments. This means countries adjust their emissions records to ensure reductions are not double counted between countries. Parties report these transfers and adjustments through their biennial transparency reports. These reports are known as BTRs. A BTR covers the National Inventory Report and progress towards the nationally determined contribution. It also covers policies, climate impacts, financial support, and capacity-building needs. The first BTR was due on 31 December 2024. Parties submit BTRs every 2 years. As of July 2026, a record 37 countries had presented their first BTRs. They presented them at the 3rd session of the Facilitative Multilateral Consideration of Progress. This event was held during SB 64 in Bonn. This reporting cycle is a real arrangement that a consultant can support. It is a clear example of a compliance-driven monitoring, reporting, and verification requirement. Monitoring, reporting, and verification is often called MRV. MRV ensures that climate actions are measured and reported correctly. The BTR cycle shows how countries prove they are meeting their promises. It is a key part of the Global Transparency Framework. Closely linked is the Article 6.4 Paris Agreement Crediting Mechanism, or PACM. The PACM is supervised by a centralized UN body. Verification under the PACM is conducted by independent verifiers. They check the data against the approved PACM methodologies. The independence level is mandated by the UNFCCC supervisory body. The consequence is the issuance of Article 6.4 emission reductions. A critical real example of this framework is the PACM transition. Existing projects must transition to the PACM methodology for all vintages from 2026 onwards. A vintage is the year in which the emission reduction occurred. This transition forces an MRV system to be respecified. To support this, an interim registry launched in early 2026. This registry will operate while permanent infrastructure is completed. The first PACM methodology entered into force on adoption, 30 October. It is valid for 5 years unless revised or withdrawn. This is the first methodology to set out how baseline alignment with the Paris Agreement works in practice. A baseline is the level of emissions that would occur without the project. With this methodology, the UN carbon market is described as fully operational. This is a real, dated example of a rulebook change. It shows how new rules affect project developers and consultants. You must understand these changes to guide your clients. The rules shift the way projects prove their climate impact. Projects must now align their baselines with national climate goals. This makes the verification process more complex but more credible. It ensures that credits represent real, additional emission reductions. Across all these frameworks, the underlying data collection processes are increasingly digitized. Digital MRV, or dMRV, replaces manual steps with technology. It combines satellite imagery, artificial intelligence, and Internet of Things sensors. It also uses distributed ledger or blockchain records. These tools collect, process, and verify data with far less manual handling. The digital workflow runs in 6 steps. It starts with data capture, then moves to standardization. Next comes quality control, followed by calculation. The 5th step is independent verification, and the final step is registry issuance. There is no manual re-entry between these steps. The system maintains continuous audit logs. Audit logs are records of every change made to the data. This means verifiers review structured data rather than reconstructing scattered records. Claimed benefits include lower transaction costs and better data accuracy. It also offers faster and more credible issuance at scale. The World Bank's Carbon Markets Infrastructure Working Group produced a technical guidance note on standardizing digital MRV. This note includes evaluation criteria for assessing system performance. It helps identify where digitization adds value. Verra, Gold Standard, and the American Carbon Registry increasingly accept and encourage digital data pipelines. This is particularly true for removals, where carbon is taken out of the atmosphere. As dMRV moves from pilot to governed infrastructure, standard bodies are beginning to formally approve providers. The Global Carbon Council, a voluntary standard body, has established a dMRV solution provider approval procedure. This is described as a first in the voluntary carbon market. Under this procedure, a platform named Trace is the first approved dMRV platform. Trace was developed by NextGreen, which is Next Green Tech Limited. Next Green Tech Limited holds provisional approval under Track 2 for dMRV Sectoral Scope Number 1. This covers energy generation, transmission, distribution, and energy efficiency. It is aligned with GCC Greenhouse Gas Sectoral Scopes 1, 2, and 3. The platform provides real-time data acquisition and role-based access control. It also offers tamper-proof data handling and API-based integration with the GCC project portal. The teaching point here is the approval procedure itself. We are not recommending the product or claiming it is better than alternatives. The point is that a standard body is now defining tracks and sectoral scopes. It grants provisional approvals. This means a platform's outputs can be relied on in the issuance process. This is a major step for the carbon market. When implementing dMRV, consultants must remain aware of documented technology failure modes. These include sensor drift and calibration loss in Internet of Things devices. They also include cloud cover and resolution limits in optical remote sensing. Another risk is silent failure in automated data pipelines. A silent failure means the system stops working correctly but does not send an alert. Furthermore, An immutable ledger entry of a wrong number is still wrong. A blockchain record cannot be changed, so bad data stays bad. These are generic engineering realities. They must be managed regardless of the framework used. You must design systems to catch these errors. You cannot assume that digital tools are always perfect. Good digital MRV requires strong quality control at every step. To finish this section, you should produce a verification framework comparison matrix. This matrix must map a client's chosen reporting pathway. The pathway could be corporate, voluntary, or Article 6. You must map it against the 4 core questions. Who verifies? Against what criteria? At what independence level? With what consequence? You must also include a section on how dMRV technologies will be governed. Explain how they will be validated under that specific framework. This task will help you apply the concepts we have covered. It will show you how to translate these rules into practical advice for your clients. Your matrix will become a useful reference tool for future projects.